Hello and welcome to Business Week, the program that brings you top business stories that made the headlines during the course of this week, including special news features, market data, interviews, and much more. Welcome to the show. Well, here's the highlight of the biggest stories we tracked for you over the course of this week. On the local front, Nigeria's inflation rate dropped to 17.38% in the month of July this year, recording the fourth consecutive month of decline. In the energy sector, the Department of Petroleum Resources has introduced a compulsory program termed the Minimum Industry Safety Training for downstream operations in a bid to put an end to the recurring annual fatalities in its arm of oil and gas industry. Nigeria's foreign reserves have also resumed downward trend, hitting $33.58 billion on the 12th of this month. The International Monetary Fund data has also shown Nigeria's foreign liabilities currently stands at $187.36 billion, while the country's foreign assets amounted to $102.15 billion as of the end of last year. And still some reports from the international front, the number of employees on British company payrolls rose by 182,000 last month, from June moving closer to their pre-pandemic levels as the economy recovers from the coronavirus lockdowns. In China, the country's moved to tighten control of its technology sector, publishing detailed rules aimed at tackling unfair competition in companies' handling of critical data. The European Central Bank President Christine Lagarde will not be attending the high-profile annual Jackson Hole Conference of Central Bankers later this month. Well, it's now time to bring you special packages prepared by our correspondents. Now, in this report, as Nigerians await the full implementation of the Petroleum Industry Act, Minister of State for Petroleum Resources Timi Silva says that the 3% earmarked for host communities is better than 100% of what they do not know. The minister, while addressing newsmen in Abuja, also notes that the Nigeria National Petroleum Corporation will soon be a limited company as stipulated in the PIA. TVC News correspondent Celestina Iria reports.
The Petroleum Industry Act provides for a legal governance, regulatory and physical framework for the Nigerian petroleum industry, the development of host communities and related matters. But some of the enthusiasm the passage of the bill should have elicited is dimmed by the controversies raised over the allocation of 3% revenue to host communities in the Niger Delta, while a fund for the exploration of oil in frontier basins, mostly in northern states, received 30%. This quota was rejected by the Southern Governance Forum and leaders of the South-South region who demanded 10% or in the minimum 5% as earlier passed by the House of Representatives. Addressing some of the concerns raised by Nigerians, Minister of State for Petroleum Resources says the purpose of the PIB is to attract investors to get enough crude oil as possible, as the world is now in the last mile of the oil economy. He argues that the 3% earmarked for host communities is better than 100%, with investors failing to invest in the oil economy, as investors will add the 3% to their operational costs. He notes that the country is in a race to produce as much oil as possible because if she's overtaken by developing global trends, there will be oil but no market for it. In the wake of the COVID-19 pandemic, the cost of crude oil production reduced by 5% as market prices crashed, contracts were rationalized, and local manpower had to be employed as expatriates had to return to their countries.
We talk about the 3% in the bill. For us in the Niger Delta, I asked them, 3% of something, is that not better than 100% of what you don't know? What we want to achieve, the philosophy behind this bill, is to attract investors to Nigeria, to produce as much of this crude in the ground as possible. Now, that is what we want to achieve. So we must measure everything against this philosophy.
As stipulated in the PIB, the NNPC will be incorporated within 6 months by the Ministry of Petroleum and the Ministry of Finance into a limited liability company. The transition process will commence soon. The minister noted that the assent of the PNIB by the president will greatly improve the petroleum industry, and also the ministry is in talks with gas cylinder suppliers to ensure that gas cylinders are affordable to all Nigerians.
And in the same vein, now President Muhammadu Buhari has also approved the establishment of a steering committee to commence the implementation of the newly signed Petroleum Industry Act. The committee will be headed by the Minister of State for Petroleum Resources, Timothy Silva. Mr. President gave this approval shortly before the commencement of this week's Federal Council meeting in the presidential villa.
We are all aware that past administrations have identified the need to further align the industry for global competitiveness, but there are lack of political will to actualize this needed transformation. This lack of progress has stagnated the growth of the industry and the prosperity of our economy.
The host communities are winners as well. It may not be necessarily exactly what some of them had hoped, but you know, from zero to 500 to over $500 million, I think it's a big jump. And with time, such issues could be further addressed. But I want to also caution that it's not the $500 million that is small, but how we are able to prudently and transparently deploy these $500 million in the host communities.
We now delve deeper into the feature of the show today, looking at an analysis of matters arising following the presidential assent of the Petroleum Industry Bill, now the Petroleum Industry Act. Details of this conversation and much more is coming up shortly after this break. Many thanks for staying with us. Let's the crux of today's discourse. The highlight of this week remains President Muhammadu Buhari's signing of the Petroleum Industry Bill 2021 into law. This means it's now the Petroleum Industry Act. This is coming weeks after the National Assembly passed the bill. The Petroleum Industry Act provides legal, governance, regulatory and fiscal framework for the Nigerian petroleum industry, the development of host communities and other related matters. Now, the bill had remained at the National Assembly for more than a decade, with successive sessions of the Senate and House of Representatives failing to prove its provisions of sweeping reforms for the oil and gas sector. Now, by assenting, the President possibly aligned with the position of the National Assembly, which proposes a 30% revenue allocation for the development of frontier inland basins that are mainly in the north, dismal allocation to host communities, possible duopoly in the downstream sector, a 10% management fee, and other issues on product sharing contract, as well as joint venture obligations. In a letter to the President, now the Secretary General of the Organization of Petroleum Exporting Countries, Mohammed Barkindo, commended the signing, stating that the law will enhance Nigeria's petroleum industry's reputation, open new doors to investment, and ultimately strengthen its position to meet the world's growing demand for energy. Well, joining me now to discuss this and much more, I have managing partner, Zenera consultant Mecca Lowella. Good to have you on the show today.
Thank you for having me.
Well, now, this act, despite a delay, is somewhat timely as the investment outlook in the petroleum industry becomes a little clouded by efforts aimed at accelerating a lower carbon future. Furthermore, the new law would also help enhance Nigeria's potential to achieve its program of raising oil production to at least 4 million barrels per day and oil reserves to about 40 billion barrels as well, while we're also drawing on the country's vast natural reserves to provide clean and efficient energy. Do you share in this optimism despite the mixed reactions that have trailed this move so far?
Yes, I actually share in that optimism, because now we have a direction and we have, a framework or an understanding of what investors should expect. For 20 years, we've been discussing this, we've been wondering, what's going to exactly constitute, the provisions of the act, and now we have a direction, and we are confident that we will get some results from these, because for the first time we now see a lot of stakeholder engagement. The GMD and of NNPC, we had the petroleum minister himself, the president, we had the petroleum minister of state, come, provide some, clarifications around, the act, and all of those are signaling that we should be optimistic. They got it, despite the fact that, like every act, there are certain provisions, that are generating controversies along delicate fault lines, However, I would still maintain a very optimistic view, because, it's like managing a bad situation better. What are the opportunities that you can maximize? What are the things that you must do? So a Petroleum Industry Act, even though 20 years, late in coming, but it's still better, that we have one now that we can, use to drive good governance, accountability, creation of a commercially viable national petroleum, company, and generally foster conducive environment for petroleum operations. So it's a yes, there are negative sentiments along, unfortunately, along ethnic and some other lines, but it's a net positive for Nigeria, whichever way you look at it.
No doubt now the presidential assent would definitely test the capacity of government to implement its own laws. This isn't the first, especially as it relates to the downstream deregulation, particularly looking at issues around subsidy removal. At a time when we are all calling for social cushions ahead of subsidy removal, what will be the biggest mistakes, or should I say blind spots, we would have to face?
So, David, let's put it this way. Making the mistakes that we've always made will be one of the major pitfalls, and that's why it's a sensitive decision, to take. Yes, deregulation is the best for Nigeria. Nigeria cannot actually support the 160 billion monthly bill that we use to subsidize petroleum products, right? That's the truth of the matter, However, there's still a huge consistency that we need to look at, which is the people, right? World Bank data says Nigeria is the poverty capital of the world. That's arguable. But what it means is that statistically, you have a huge demographic that you need to take care of, before you then remove that subsidy that is going to most likely ramp up, the pump price of fuel. All right. So I would say some of the things that we need to put into place are some of the issues we've always discussed, David, for the past 2 to 3 years. Ensure that there are enough palliatives to cushion, the shocks that are going to come as a result of the removal of fuel subsidies. Right. So federal government said, the solar home solutions, they announced solar home solutions to 5 million families, right? Where are we with that? How quickly can you implement that? Those are the things that have to be in place before you then remove those shocks. Metering. Many people are still suffering estimated billing for power. Okay, so I'm pointing to the big, where the highest percentage of earnings of the average citizen goes into transportation, power, and feeding. So what are we doing along those lines? Are we reducing how much they are arbitrarily charged, by on power? Are we ameliorating, the sufferings of the people via transportation? What are we doing about water transportation and all those opportunities? Those are the questions, and I think the things that we need to highlight and put in place before you then remove, the subsidies. We can go and ask Lagos State, despite, the NSAS challenges that they are having, you would have to, respect Governor Sanwo-Olu for the things that he's doing, and we will see those things come to fruition in a matter of months, water transportation, rail, security. So how are they doing it? How are they achieving all of those, laudable feats? And then how can we then transposition them, at the federal level to make sure that we not only provide this, we educate people properly. So by the time this thing comes, it's a collective, happy decision for everybody.
And now, still talking about the subsidy removal. Now, for how long do you think it will take government to build a feasible framework to support subsidy removal? The general consensus is that clearly the subsidy regime is unsustainable, is draining funds, and we cannot continue to incur the cost for far too long a period.
So again, it's going back, to which comes first, the chicken or the egg, but what we need to do is to dimension the alternative cost of not deregulating. So right now there's a lot of opacity, there's a lot of corruption that is happening around subsidy that is leaving Nigeria holding the shorter end of the stick. So it's about good governance, it's about proper decision making. How are you going to utilize, the funds that will come from removal of subsidy? So do the people trust you enough? So we've seen some of the very difficult decisions that other economies have had to take, like Singapore, and how the people have received them, because they trust the government. So, I think it's a trust deficit that we have between government and the people here that is playing out. Because to be candid, the regulation is the right position to adopt in Nigeria now, period. We can't afford to continue to waste 160 billion naira every month, all right, that could have gone into, things like refinery, but what people like Labour and analysts are saying is, why don't we have a functional, refining capacity in Nigeria? Those are things that should have been done long ago, right? So it's a very convoluted and very complex, conversation to have, but the truth is that we are gradually moving and taking steps towards, the right, in the right direction. We're taking baby steps, but we are moving in the right direction. That's the heartwarming bit of it. So we just have to be ready, to adjust. Government needs to then be humble enough to engage citizenry and to push the change management in the way that would have the citizenry accepting, the decisions that we need to do, very difficult decisions that we need to make around, subsidy removals in a way that is collective and inclusive.
Now, with the increase in landing cost of petrol now at about 250 naira, the retail pump price of petrol is also expected to rise at least to about 400 naira a litre. What price band do you think would most likely play out the moment we have the subsidy regime over?
Well, it's difficult to put a price to it now. Today's landing cost is anywhere between 250 to 260 naira per liter. So international oil prices also will determine, what will happen in the next few months. However, the federal government, despite signing, the Petroleum Industry Act into law on Monday, have said that subsidy would remain pending the outcome of current negotiations with labor unions in the country. I don't really think it's about, that's a very good excuse, and that's a very good defense, to put forth. But I think it's a bit more convoluted than that, and it's about not just what labor is saying, but how ready are they, in terms of the reputation capital that they have to be able to take such a very difficult decision. So which palliatives are available, in country to defend those decisions, and where is a political strength going to come from? Because remember, in a year's time, by summer of next year, every Nigeria is going to move into election mode, and things will be around popularity and decisions that you've taken and stuff like that. So I think those are the bigger issues that government is considering by saying that pump price of fuel will remain at 162 or 100 to 165 until they agree on full deregulation of the downstream sector. But like I said, we're making gradual steps in the right direction.
And looking at some fundamentals now, there are some elements that haven't changed at all or much over the course of recent history, from the state and maintenance of our refineries, the utilization of oil proceeds to boost other sectors of the economy, and then the treatment of host communities, allocations and development index. How do you think we can now begin to measure up?
Well, so I assume you're going back again to the provisions of the Act itself now, right? The main objective is to foster sustainability or sustainable prosperity within host communities, right? By providing direct social and economic benefits that enhance harmonious coexistence, right? So any company in the new dispensation now, any company granted a prospecting license or mining lease, or operating a JV or PSC will be required to contribute between 3 to 5%, right, as an upstream company, and 2% if you're another company, to the actual operating expenditure, right, of the host community. So it's going to be indexed against your preceding year. Now, that's a big change. Before now, companies were encouraged, to execute corporate social responsibility programs, and then a lot was left, to appealing to their sense of responsibility. Now it's a law that you're going to index your previous operating expenditure. So your financial statement, your audited financial statement of the preceding year. So it's not subject to controversy, right? So it's an incontrovertible empirical data that we're going to be dealing with. So that is going to be contributed and is going to be managed by a committee that's going to be constituted by people of integrity and, including the host communities themselves. All right. So what we are going to now see is that in the new dispensation, 75% of those funds will now be allocated to capital projects. And then you have 20% to reserve for you to keep. And then you can use about 5% for administrative, expenses. Now, the most interesting thing here, from as an oil and gas operative, is that for the first time, what you're going to find is that a community will forfeit the cost of repairs, or would have to bear the cost of repairs in the case of vandalism, sabotage, or any civic or unrest that causes damage to petroleum facilities. So what would then happen is that the role of safeguarding assets in the oil producing regions will now be a collective effort, because when something happens to the operating oil and gas company, it affects directly the community. So that inclusiveness, that collective responsibility is one that will see both the host community and the operating oil and gas companies working together in tandem.
Wrapping up our conversation now, the Nigerian National Petroleum Corporation in the next 6 months is going to be a commercial entity. How do you think this would also enhance the profitability of the NNPC and also the transparency framework? Because there are concerns within that regard. Your thoughts?
So I think it will enhance it, positively. The commercialization of NNPC will pave way for the realization of full potential of Nigeria petroleum industry, period. That's the truth. The NNPC, we've debated this over and over again. The NNPC, if properly managed, has a lot to offer the country. So personally, I think this is actually the most welcome provision of all the 319 sections in the Act, right? Because it will force, NNPC to do evaluation. And for the first time, we will know how much the NNPC is worth. And we will join the likes of Petrobras of Brazil, Petronas of Malaysia, Saudi Aramco of Saudi Arabia, to become a commercially viable, independent National Oil Corporation. All right. So if you see the things that Saudi Aramco has done, you will see that there are so many opportunities for us. In the future, we can start to talk about an initial public offer. We can start to talk about listing the NNPC on several stock exchanges, right? And if you going back again to Saudi Arabia, they did a valuation of their national oil company, Saudi Aramco, and came to the conclusion that, the analyst, financial advisor said they were worth between 5.5 and 1.5 and 1.7 trillion dollars, right? But when they went to the market and they floated the IPO, they sold 1.5% equity for $26 billion, which put their valuation at about $1.75 trillion. Now, that is outperforming even the advisors. Now, that is a significant development because it means that the market was rewarding them for the brand capital and trust that it built and the viability of the business plan. Those are the things that we hope we would see with NNPC. NNPC is about 43 years old. It's only once that we have seen an audited account from NNPC, and that was just last year, right? But that will be a thing of the past. Every year, shareholders will gather and say, where is the financial statement of this company? So you're going to see accountability, you're going to see transparency, you're going to see commercial value being extracted from the NNPC. And that will attract, international investors, local investors alike. So you will leave the regulatory functions of NNPC to the Nigeria Upstream Regulatory Commission, and then we'll focus on NNPC being run as a commercial venture, and then we will see what excuses they will come up with again.
Thank you very much for your time on the show today. Managing Partner, Zenera Consulting, Mekau Lowola. It's been a pleasure speaking with you.
Thank you for having me.
But just before we go now, here are graphic details of the inflation data as prepared by the National Bureau of Statistics for the month of July. That's it on this edition of Business Week. Many thanks for watching so far. Do enjoy the rest of your weekend. I'm David Alabi. Bye for now.